and I, collected a small portfolio of single family homes over our career, many of them the whole unexpected landlord situation. And once we got into it, and my wife's been a residential real estate agent for about the last 19 years, and we realized, hey, the power of real estate, and just started, hey, we wanted to scale. And so we got into multifamily, and we've had a really, really great start. We're excited about the next couple of years as well.
Yeah, for sure. Tell us about your first property that you all purchased, and then how you kind of got to where you're now at 475 units, which is very notable. And then we'll get into how you manage it and how you were acquiring more.
Certainly. Well, we partnered with a group that's really, really active in the South Carolina market back early last year, and bought a 160 unit portfolio in Savannah, Georgia. And we had met them via a mastermind that we joined early last year and became really close friends. And I'm a capital raiser by trade, and my wife is an underwriter by trade. And we are engaging these operators and trying to bring value to them, and finally got somebody to, you have the, hey, put me in, coach, and finally got somebody to put us in. And we're able to raise quite a bit of money in a short order of time. And that kind of lit a fire under us. And we really started to get some calls and get some deal flow and things of that nature. So it's been really, really good. And Savannah is obviously a great market, and it was a great deal. So that makes it even that much easier.
Now, are your all's other properties, are they within the same area, vicinity?
We've got 2 properties in Savannah. We have a property in Florence, South Carolina. And then we just closed on a 108 unit property in Charleston, South Carolina in December. So
Nice. Yeah,
all in Georgia and South Carolina right now, but we're looking in Texas and Florida as well. We live here in Tampa.
Yeah, nice. Wherever usually the population goes, job growth goes, and on from there. And then supply constraints, which is good.
For sure. Well, supply constraints is, you got to be careful these days with so much coming to market here in the next 12 to 18 months. It's you got to be paying attention to that for sure.
Yeah, I think Houston, Texas has got 64,000 units coming online within the next 18 months. So there's going to be absorption issues for sure in that market. Like the norm might be a 75% occupancy until it's just what it is.
Yeah.
Everyone runs there and it starts building.
It builds. It starts building.
And then the builders stop building, and then you've got another bubble. So it's
the
next. Yeah, for sure. So what do you look for in sponsors so that listeners might know? So is it because there's a lot more to owning real estate. The operator behind the scenes, the jockey on a horse. There's an active side of real estate. It's an extremely important role. What do you all look for in that group?
I mean, we look to get to know them, really. I mean, the thing that we've seen, especially since we've started to have some success, is we've got folks reaching out to us quite frequently to raise capital. And you get these deals coming across, you're like, man, this is a great deal. This is a 9% cash on cash and a 2.1 equity multiple. And you get all excited. You're like, man, I can raise money for this. I can raise money for this. But then you step back and you're like, man, I don't even know these people. So I think you've really got to make a concerted effort. I mean, you don't have to, live next door to them or have gone out drinking beer with them 25 times or them be your best friend from high school, but you should have at least kind of had several, and I say several, conversations with them to get a feel about, what's their level of expertise, what's their level of market knowledge, and more importantly, can you get along with them, because you're getting basically married to them, and do you trust them? And I think, and that takes time, it takes time, and you've got to have some discipline, because if you're like me, and I think most capital raisers are, they're deal junkies. Hey, let's go. And you can get yourself into some big trouble if you get too far out over your skis with an operator that you don't know.
Yeah, for sure. Experience is everything. I think you've had to lose money at some point in your career, and it had to be in your own business. And then you've had to figure out how to print that money again, and not with someone else's cash. So you've lost money. You know how that feels. And then how did you make it back? And then what is your business acumen? How have you ran your companies? And then what is the story to be told? Another thing I looked at is the reversion cap rate. if you've got a 1970s vintage apartment community and the reversion cap rate's a 5.5, that's just, you got to toss that out, because those asset vintages shouldn't be trading at a 5.5 cap.
Yeah.
Just because just things, 5.5 caps reserved for uh, brand new in great areas. Those are coupon clipping returns. They're not for your workforce and asset classes that demand more maintenance dollars going out. So there's definitely some flags that you can wave on underwriting from sponsorship groups.
Yeah, and you hit on a great point. I mean, you've got to know what a deal looks like. I mean, a lot of capital. I'm very lucky because I understand underwriting to a very, very good degree, but my wife is an absolute expert. So it helps to, if you don't have somebody like I do, I mean, all capital raisers really need to know what a deal looks like. And I think that's, you get excited, I can raise money, but you need to know what you're selling for sure.
Yeah, and if in entrepreneurships, they're able to pivot and be able to make things happen when other people don't know the next 5 moves. And if you go down into the entrepreneur, you're able to just make things cash flow in environments where other people can't figure out how to cash flow. So the sponsorship, the sponsor, the jockey, having that business acumen, being in business before he starts actually operating multifamily as a business, I think is extremely important. It can get you out of pretty tough times, just knowing the different fundamentals. What kind of capital are you raising? Is it from family office, from retail investors? What are you going after?
Right now, we've just engaged retail investors. I mean, we have had conversations with several family offices and some institutional investors. We haven't raised any capital with them yet. We're engaging some local wealth management firms here too. We found that that's been pretty, the conversations have been really, really encouraging, because what we found is a lot of these organizations, don't currently offer any type of alternative investments. So just going out and having these conversations saying, hey, do you think your investor base, your wealth management clientele would have any interest in these type of investments, rather than just your traditional, stocks and bonds and things like that. And we've found that to be very encouraging. We've had a couple of those types of meetings, and they've both gone very, very well. So we think that's a potential area of expansion for us.
Yeah, it's cool to be able to drive down the road and then you can point to the building with your family and say you own a piece of that. It's a brick and mortar. It's a different feeling versus the stock market, where you don't know the value is going up or down.
Yeah, we're actually in the process of setting up some investor site visit days. Yeah. And hey, host them out at the property, let them walk a classic unit and a renovated unit, and really see some of the business plan in action, whether it's roofs or parking lot or new amenities, and just kind of put that concept out to a few of our deals. And man, the response has been overwhelming. So people really like that idea. Yeah,
it just builds camaraderie and gets everyone together, and you can learn a lot just by getting some energy in a room and just open forum and hear some feedback. That could be huge. What are you seeing with your all's deal flow as far as underwriting and then the capital markets?
We've been really pleasantly surprised. I mean, obviously last year was kind of a grind, with deal flow, but we've really been, now I do capital raising, but I also talk to brokers pretty much all day, every day. I think I've talked to 13 or 14 brokers this week already. So, and that helps a lot, establish those relationships and get deals coming across your desk. So we've seen definitely an uptick so far this year. We're still seeing a 12 to 18%, spread between buyer and seller. Some, bigger in some markets and smaller in some markets, but we are seeing more deals come across the desk than normal, or at least than last year. Yeah,
and we're seeing a mix too, as far as what's penciling, what's not. I think there's still a lot of selling based on pro forma versus the in-place financials, and those are what gets the operators in trouble, and then ultimately that flows downhill. Multifamily is a business. Buy it for what it's worth if you're able to, and I mean, you should be pretty happy if you can execute on the business plan and get things going like they should. Yeah. Let's talk about mastermind groups. how does that help with someone wanting to get into real estate, getting in a room and trying to figure out their path?
I mean, I think for us, it helped Victoria, my wife, and I in that, we kind of already knew the value of real estate. We had already taken a couple of courses on how to scale, from some of the providers out there. So we knew the value. We had been operating our own properties with our smaller portfolio, and then getting into mastermind was just really about acceleration. One, it was about, getting a coach or a mentor, that you could reach out and say, hey, you're a year or two, 5 years ahead of me. What would you do in this situation? What pitfalls and speed bumps should I avoid? And giving you that level of comfort. But it's really about accelerating your progress. Just the network and provided by a lot of these masterminds is just, it'll light fire on your progress for sure.
Yeah, definitely getting in a room and learning the expertise and really just one golden nugget you can pick up from a conversation. It could truly change the trajectory of where you're heading or a strategy. There's with real estate, everyone is willing to help everyone level up, and no matter what, there's always somebody ahead of you. Whether you've got 40,000 units or 100 or even 39,000 units, there's somebody that's to the next level, and they've used different tactics to get there too.
Man, you hit right on it too. I want to stomp my foot on it. That was such a great point, Josh. It's like everybody's trying to help everybody. That's the thing that we noticed immediately. It's not like, hey, Josh, you're going after that deal. Well, I need to try to, sweep the legs or something like that. It's just like, hey, how can I help? And every conversation that we've had thus far has just been like, hey, is there anything I can do for you? Can I send you this? Can I help you with a format, a template, a phone call, an intro? So it's just been really wonderful.
Yeah, for sure. And like you had mentioned, getting in a room and those relationships that can help propel you forward just so much faster. What's been some learning lessons that you've learned along the way, and things that you now wouldn't do twice?
Man, I'm a deal junkie, so I like to. I'd love to chase deals. Like, oh, we should do this one, and we should do this one, and we should do this one, and I think what I need to work on and what I've learned is, you can chase deals and waste a bunch of time. And the numbers are the numbers. So, hey, this is what our KPI metrics are, the returns, metrics that we want to give our investors. And if you can't put together a reasonable offer that still meets your returns, then let it go and move on, because there'll be another deal. And sometimes I find myself, at the underwriting model going, man, if I just reduce this a little bit or push the rents a little higher here. And, and I've come to my wife slaps me, and I've come to the realization, hey man, don't chase a deal. The numbers are the numbers. And so I'm doing my best and really making a focused effort in 24 to take, a renewed point of emphasis.
Yeah, I call that the shiny object syndrome. It's, exactly. And then if you can't find a deal, it's like you're trying to create the deal, and then you get out of your swim lane, and then there's no deal. So it's
then you're in deep water, right?
Real estate's fun. There's a lot of different strategies, a lot of different real estate types, asset classes, and if you pick one, focus, double down, triple down, figure out what's working, then I think that's where that's where scaling's created, is once you're able to focus that energy. And that's what we've been doing. At first, you're scattered out because you're trying to figure out what you truly do like. So there's nothing wrong with that neither. So it's just what can you excel in, and then double down. What would be your ideal investor?
I think my ideal investor is, I retired from the military, and then I went directly into federal contracting. So, so I had that get paid every 2 weeks, no risk, from a military perspective. But I looked around, and everybody, regardless of how hard they were working or how hard they were working, or, everybody's getting paid relatively the same rate. If you're a Navy commander, you're getting paid what a Navy commander makes. If you're and there are good Navy commanders, and there are not so good Navy commanders. And, and that's the same in all walks of life and all occupations. And then I got into IT sales, and it's, the harder you work, the more money you make. And I think, I would love to focus and have focused on, not only military folks, active duty and retired, but also those folks in the federal contracting realm, because a lot of those military folks retire and they go work for the General Dynamics or the Boeings or the Lockheeds or whatever, and they don't get exposure to different investment models, alternative investments, and ways that can really level up your financial future. So I try to reach out and help, military veterans and folks that are in defense contracting and federal contracting, because I think there's, a lot of good to be done there, and have had good success in that area.
Yeah, it's really easy to get trapped. I'm going to say trapped in the vortex, because you're so concentrated on your job and what's in front of you. Um, and it's a passion, because you love what you're doing, and there's not really anywhere else. There's no purpose to look anywhere else. Um, so and I've been there myself. Build a company up, build it up. You're not looking looking right, left. You're just looking straight ahead.
Yeah.
Keep focused, and then ultimately it's catches up with you down the road at some point. But yeah, it just depends on when you find it. So your investors would be the ones that are career oriented, career focused, but need to diversify, need to start looking for the path in the future. What and that's your room anyways, because you can speak the language with them. You know exactly where they're coming from and what they're doing. So that's huge. Your avatar is great. Where are you meeting these people at?
Well, I mean, I'm still connected to, the defense industry, in a large way. I just left IBM in last March. So still have a huge, very expansive network in the federal industry, the federal contracting industry. And then just, my military career, you deploy with folks, you keep in touch with them, and got longtime friends, across the military services. So really try to leverage those networks, and then really trying to be more active and deliberate on social media, to be perfectly honest with you. And one of the areas that, I'm trying to focus on, obviously in 24, is, like everybody is, okay, how do you expand that investor pool? You've got an investor pool of, maybe 300-400 people. How do you continually refresh that and continually build that? So, use it, focusing on social media, focus on getting out into different conferences and things of that nature.
It's actually it's actually hard to get out there and network, and it's because you're picking up and not doing the normal, and you're going out into different rooms and meeting different people and getting out of your comfort zone, and it can be unnerving. I mean, you're on an island in some of these rooms, and you start talking about real estate, talking about this or that, and it gets comfortable.
Yeah.
But getting in a room with some like-minded people is extremely important, and you can pick up some deals that way too. It's
it's funny. It's funny that you just hit something. It's like, I think it's powerful to get in the room with like-minded people, but I also trying to get more focused on getting in the room with folks that aren't, where I'm the different person. So yeah. I mean, being in the room in some of these real estate focused conferences and stuff like that, you're exactly right. I mean, deals get done and partnerships get made, and relationships get started, for sure. So definitely not downplaying the importance of that, but I haven't really been effective or focused on trying to be the only real estate, or one of the only handful of real estate people in a room of, doctors or what have you, so trying to look at more opportunities like that as well.
And that could be tough too. Just you probably almost alienate yourself.
Yeah. How do you talk about, hey, I'm here, I'm not a brain surgeon, I'm just a real estate guy. What are you doing here?
Yeah, they're like, yeah, I heard about real estate. But exactly. For sure. Yeah. So what does the growth look like? What does the future look like as far as your holdings? How big do you want the portfolio to get?
Oh goodness. I mean, I'd like to double our holdings this year. I think my wife and I, it's a great question, because it's something that we're really kind of turning over in our head. As a capital raiser, if you're a successful capital raiser, you raise, a certain percent, and you get, maybe a small percentage of the GP share, and which is great. And we're obviously thankful of that, but we're actually kind of thinking about and looking at, trying to be a lead sponsor here this year on a deal, just to, to see what it feels like. One, to see what it feels like, and to two, obviously you can make a heck of a lot more money, but it's a heck of a lot more work. So
Yeah.
I think we don't want to we haven't made any final decisions until we want to try that. You want to try that shirt on or test drive that car before you make a decision. So we're hoping to double the size of our portfolio and hoping to do our first lead sponsor deal this year, and then raise capital for 2 or 3 deals as well.
Yeah, I think being a lead sponsor is a blessing and a curse. I say that because it's with my background, just being the lead sponsor is kind of all I know how to do as far as taking something from X to Z. But then you are responsible for everything: communications going out, executing the business plan, making sure the expenses are crushed, because we're vertically integrated. We asset manage, and construction teams, project managers. So it's a blessing and a curse because you are stuck in the weeds.
All the
But
time.
at the same time, you have complete control of the deal. You're not relying on third party to execute your business plan or hoping that someone else can do what you expect them to do. You're getting it done. So it's a blessing and a curse. I say that it takes a lot longer to scale, but there's balance. You have to have outflow and inflow, and if your operations can't keep up with your acquisitions, you're out of balance, and then that could equal disturbance. So, but it's going through the motions. It's making sure the message is tranquil all the way down from the top, and so when you get your lead sponsor role, it's definitely. But if you have good property management in front of you that can execute on a business plan, that makes all the difference in the world. We weren't so lucky out of the gate, so we were forced to go into property management, which now it's kind of like no turning back. But in larger assets, I think can compensate, of course, with different types of property management as well, which I think that's what you all are focusing on. What areas are you all focusing on? Is it just the Carolinas, or I know you'd said Florida, you'd said Texas?
Yeah, we really have had great success last year, in 23, and getting a lot of deal flow in 24 already in Georgia and in South Carolina. So right now we live in the Tampa Bay area. So we look in, kind of Tampa Bay north as far as Florida is concerned. And, with insurance here in Florida and that spread that I mentioned earlier, it's really tough to get anything to pencil, right now in Florida, the entire state for that matter. And we also look in Texas. I'm from Texas, if you can't tell from the accent, but and Texas is pretty saturated right now. I mean, it's very, very competitive to get a deal done in Texas, because as soon as it pops out, it's got, they're doing 20 walkthroughs and getting 15 bids. So, but we look in all of those areas, but we've really had our most success right now in Georgia and South Carolina.
Yeah, it's the most. I mean, finding the path of progress, little niche, little sub market. I mean,
Yeah.
they're out there. You've got to follow different data points, but man, when the herd shows up, that market is just. So you just want to look the other way.
Yeah.
It's so much competition, concentrated.
It's so true. I mean, what we found, as we really dial in our focus area, we've really found it gets easier. Easier is probably not the most accurate term, but it gets more comfortable, because you when you do underwriting on several deals in a certain area, how far you can push rents. You just know. And hey, that area is going to be a 6.1 cap or a 6.25 cap or a 5.75. I mean, you just kind of know when you're operating in a certain, a geographic area of a relatively small size, and it just gets more comfortable and you can move faster. So that's been a real learning curve for us this year, which is really, really great.
And especially if you can own like within the same vicinity, and you can leverage existing staff to help manage both. I mean, that could be huge. And then using both properties' data points to you could be a market maker in some instances.
100%.
Those are out there. Very cool. If somebody wants to get a hold of you, learn more about your company, invest aside with you, how can they reach out?
Our website is, Hartzell, and I always say it's just like the heart in your chest, HEARTSILL, capitalpartners.com. Obviously I'm active on Facebook and LinkedIn for sure. Need to get my Instagram game on. I need to get my college age daughters to get me trained up, to be perfectly honest with you, but probably Facebook, LinkedIn, and our website are all perfect. And my email address is just marv.mcguire@hartzellcapitalpartners.com.
Yeah, and we'll have all of your information in the show notes for sure on the description below. So awesome. I definitely appreciate you coming on the show today. Look forward to following you, and we will certainly talk soon.
Hey, I appreciate it, Josh. I've
All right.
enjoyed it. Thank you so much.